Welcome back to the UK Mortgage Market Insights. I'm Craig Fish and it's Friday the 13th of March 2026. It's been a tough week in the mortgage market. Pretty much all the headlines have been about one thing: rates going up. We've also got GDP data out this morning from the ONS, and honestly, that's not pretty. I want to talk about all of it and give you my honest view on where things stand, because the picture is more serious than a lot of people believe it to be. Now, if you're new here and this sort of stuff interests you, hit subscribe because we do this every Friday. So let's get straight into it. This week, almost every lender in the market has increased rates, and some of them have done it more than once. And these haven't been small tweaks here and there. We're talking meaningful repricing across the board. The reason is swap rates. On the back of tensions in the Middle East, they spiked hard this week, at points getting close to levels that we saw a year ago. That spooked lenders, and when lenders get spooked, they move fast. Now, the swap rates have settled back a little bit since, but right now we're sitting roughly 0.5% above where swap rates were just a month ago. That feeds directly into the rates that you see on the high street. Now, if you are considering a mortgage right now, I want to be clear about something, because I say this a lot, but it bears repeating. Stop trying to beat the market. Stop watching rates like a hawk and waiting for the perfect moment. It doesn't work. What matters is finding the right mortgage for your specific situation. The right product, the right term, the right lender. That's where the real value is, and that is what a good advisor does for you. Now, this morning, the ONS published GDP figures for January, and honestly, they make for some pretty sobering reading. The UK economy delivered zero growth in January. Flat, nothing. That follows 0.1% in December and 0.2% in November. So the trend is going the wrong way. Services showed no growth at all, production edged slightly negative, and the only positive was construction at 0.2%. And I'll come back to construction in a moment because that story is important. The rolling 3-month picture is marginally better. GDP grew 0.2% in the 3 months of January, but the ONS itself described the overall picture as subdued, and that's putting it diplomatically. And this is all before the full impact of energy uncertainty driven by the war in the Middle East has really fed through. Now, that risk is real. It's not going away, and it has direct implications for inflation, and therefore what the Bank of England choose to do next week. Now, construction. The ONS data today showed that house building is still contracting. The government has bold targets for new homes, and based on everything that we're seeing, they're not going to hit them. That matters enormously. Less supply, sustained demand, and a market that's already under pressure. It really isn't a very good combination. And here's my honest view. Thanks to the actions in the Middle East, the property market is at real risk this year. The uncertainty around rates, around the economy, around energy costs is creating a paralysis. Buyers are hesitant, some sellers won't move, and transactions are being lost. The government wants to do something meaningful to prevent that from getting any worse. There are two things that I'd point them to straight away. Number one, stamp duty for first-time buyers needs to go completely. When the relief threshold dropped back in April last year, first-time buyers purchasing above $300,000 went from paying nothing to facing a significant tax bill overnight. Now, in a market like London and the South East, that's not the exception. That's the norm. Taxing people at the very moment they're trying to get onto the ladder for the first time is a barrier that serves nobody. Secondly, and this is something that I've argued for a long time, downsizers shouldn't pay stamp duty either. Full stop. Think about it. What happens when an older couple in a 4-bedroom house can't afford the tax bill to move into something smaller? They stay put. That house doesn't come to market, family that needs the space can't buy it, and the whole chain locks up. Removing stamp duty for downsizers would free up an enormous amount of housing stock and get the market moving again. To me, it's common sense policy. Now, despite everything that we've said already, this is still very much a first-time buyer's market. Lenders are competing for that business, and there are genuinely good products out there for the right applicant. But you have to approach it properly. Know your numbers, get proper advice, and don't assume that the lowest rate is automatically the right mortgage for you, because it rarely is. So, that's your news for this week. Rates up across the board, swap rates elevated, economy flat, house building still struggling, and a property market that frankly needs some political courage to avoid a very difficult year. If any of this has landed close to home, whether you're a first-time buyer, thinking about moving, or coming off a fixed rate, get in touch. The links are all below. And remember, like this if it was useful, subscribe if you haven't already, and I'll see you next week. Take care.